in the 21st century. Hard-working people working hard for you and me. Moving higher, time and time again. Through the years you'll find us here. Moving higher.
Hello and welcome to Moving Iron Podcast Markets with Shawn Hackett. Shawn is with Hackett Financial in Boca Raton, Florida, and this edition of the Moving Iron Podcast is brought to you by Dawsontir and Wheel, your premier ag tire and wheel provider in North America, helping people grow. Also TractorZoom, delivering insights, and the official work boot of the Moving Iron Podcast, Dry Shod Boots. I got all kinds of stuff to say now, don't I, Shawn? How you doing, buddy?
I'm doing pretty good. But I'm not trying to keep my boots to the ground, you know?
That's right. Yeah, no kidding, right? There's plenty of stuff going on for that. When you, this is just unprecedented times. So we are, I mean, however you want to argue it, we're more or less in, they keep throwing the word recession around, but we're way more towards a depression than we are recession, just because of there's zero economic growth right now. We're just kind of putting patches on stuff and putting fingers in dikes and those kind of things to keep things afloat and what we see happening now. And the World Bank is talking about slowing the economy in China and Asia and everywhere else. And it's that's what happens when you shut the doors, right? So everyone shuts the doors down, quits doing stuff, and we see what happens. So yesterday, I was really expecting to see, we were supposed to do this yesterday. I was really expecting to see some kind of big splash in the market with jobs reports coming out and everything else that was going on. And it was really just kind of the markets went down and I get all that, but it wasn't nothing like I was expecting. So I guess give me your perspective on yesterday and kind of what you see happening now with the economy as a whole.
Well, I mean, I think everybody knows the numbers are going to be horrific. I think we talked about this last week. You know,
right.
They're going to be horrific. When you shut the economy down, we're going to have depression-like levels. You know, unemployment claims, unemployment rate, 25% decline in economic activity. I mean, we put ourselves there. We purposely have shut everything down. So I think the market made that initial reaction. Stocks and commodities had that swoosh, and now we pumped this money in to try to, as you said, patch things up. Until hopefully, we see the signs where we can begin to reopen things, and then we could have economic growth up 20% later on in the summer. I mean, it's going to be the yin and the yang. Right now, I think the market's accepted horrific numbers, feeling or understanding that, hopefully this is just a short-term thing, and they feel the government's probably done enough to stabilize things until we can, get across the bridge a little further. So I think markets have done reacting to things, unless it becomes clear this is going to be more than, another month or so. If it looks like this is going to be 3 more months, then the market probably has more reaction to the downside. But right now, I think the market anticipates off for another month. In May, we're going to start to gradually, open things up again. And as long as that continues to be the view, market's probably going to chop around instead of continuing to fall like they were.
Yeah. No, there's there's just some that it's just a weird feeling out there, right? So Trump comes up over the weekend and says, we're going to keep this not social distancing thing and limiting the number of people that we can see in the whole hotel or the restaurants and bars thing, and just trying to keep as many people away from other people as possible, because right now the United States is the epicenter of the COVID-19 situation. Last night before I went home, this is Tuesday morning, about 7 o'clock. Last night before I went home from the office, there was 160,020 cases in the U.S. Scottsbluff got its first case here over the weekend. So, I mean, it's getting into places where most people thought it wouldn't get, So it shows you the ability for it to spread. So that didn't help anything. And so as you take a look, as there's a couple reports coming out today, you got the prospective planning report, and you got the quarterly grain stock report coming out at 11 o'clock. So the prospective planning is going to start laying out what folks are going to start planting for the year, how many acres of soybeans, how many acres of corn, wheat, so on and so forth, all the fun stuff that we see happening there. What's your thought on that? Is there going to be a big switch between corn and soybeans this year, or is there going to be weed acres that are going to come into play? I mean, I guess what's your thought? What's your feel for what's going to happen out there?
The problem with this report is it relevant?
Well, last year when it flooded, it wasn't very relative.
I mean, so much has happened, since the survey was taken.
Right.
And so much continues to happen that is it really a relevant report? I mean, can we really even rely on it being at all accurate given what continues to be a rapidly changing cotton price is now at 50 cents. I mean, that wasn't the case a month. It's hard for me to imagine that the market's going to take the acreage report seriously today. I mean, yeah, there could be a short-term reaction, but I don't really think that the market's going to take this report seriously. They're just going to continue to monitor what's going on a daily basis and make their conclusions from there. So I'm not anticipating that the acreage report's going to be a market mover. Now, the quarterly grain stocks can always be a market mover. I've always felt, and history suggests, that late planted, late developing, wet crops sitting out in the field like we had last year, the big adjustments are made during quarterly grain stocks report. That's how the USDA gets the number right, meaning they're wrong, and then they quietly say, oh, by the way, it's not our fault, we just can't find it. And then they correct everything.
Right.
That's what they do.
That's awful convenient.
Now we do know USDA is a political organization, and I don't know what happened if these discussions happen about what they should or shouldn't say, depending on the circumstances. Normally, the USDA would come clean in the June quarterly grain stocks. That's when they would normally come clean. That's when they would go, we just can't find 600 bushels of corn. We don't know why, and so there it is. Will they be tempted to do something now because of the, conditions we're in and the pressure farmers are in? Could there be some pressure in place that maybe they make a larger adjustment today than they would otherwise be the case? I have no idea. But if they were inclined to tell the truth a little sooner than normal, this might be a report that maybe they make some larger adjustments downward than we would normally expect to see. I'm still going with June being the report that I'm expecting to see. Or could there be some pressure to maybe help the farmer out, maybe help the market out, show that we just can't find hundreds of millions of bushels of corn and soybeans around? It's possible. I'd be looking for that report to possibly be the market mover. I don't think the acreage report's going to be taken seriously.
Right. This is the same scenario that happened last year. I mean, they did this, the survey and everything, and then lo and behold, we had 40 days and 40 nights of rain, and pretty well 3.5 months of rain, and it was the market traded on that all the way through till the June, July time frame. And when we saw that run up, when everyone was making that China thing was going to get done, then that's when we saw that 450 corn on the board. And it fell off down to where we're, lost $1 since then. But to your point, I'm right there with you. I mean, the more you step back and look at this report, the last 2 or 3 years especially, it's not been what it said it was going to be. And the USDA puts that out and just lives and dies by it and just dies on the hill until they're like, well, you know what? We made a mistake. So it's things like that kind of irritate me about that.
I agree. I mean, what they say is important. What ultimately happens, look, the wheat market's a tractor. We've had a big rally, scarcity trade, hoarding trade. More wheat acres are going to get planted, at least for spring wheat. We know that's going to take place if it can get done. It may not show that in this report, but we're going to get that done. Cotton acres are going to be in crash mode at 50 cents. Mm-hmm. Only the very, very, very best acres in Texas are going to get planted and not much else. I mean, so we know that's going to be down. We know rice acres, which compete with cotton quite a bit, are going to be up. Soybeans had hung in there relative to corn and cotton. So, we think they're going to gain acres, although we don't think that's going to show up in this report. So, once again, this report I don't think is valid to where prices are today, and we think the market is just going to, an algorithm may trade it for an hour or two, but I think the market's going to quickly look at the comparative economics and say, what's really going to get done, and then of course we watch weather. What can get done, what areas are getting it done, and then we take our cues from there. So the other thing that I think is pretty important is we're watching China. We're watching their unloading of their ships, because we know that when they shut down, all the ships got backed up. Nothing was coming in. All the the imports they were making were shut down. But we're watching this on a daily basis, and the ships that are waiting for unloading are crashing, meaning they're getting their ships unloaded. They're getting the bottleneck cleaned up. That's very optimistic. That's very positive, because that says they're now getting capacity from which they can now restart their import engine of food. And so we think that there could be some surprises. We talked about this last week about watching these Thursday morning weekly export reports for some increases or some systemic increases in China's imports now that they have kind of cleaned up this bottleneck. And we think that could be what might be a bigger driver for U.S. ag, is that they're going to start to buy U.S. ag at these very cheap prices and start to fire things up again. So we're thinking that could be the bigger driver here in the month of April, not exactly this particular report. So.
Yeah. Well, I hope you're right, because it's there is plenty of that going on. I mean, it just feels like there's an opportunity out there knocking that now that China has come back into kind of full scale, getting their economy fired back up type of thing.
And by the way, the eternal optimist that I am, because that's just how I live my life. But I'm an eternal optimist. We've seen significant reductions in the Italian new cases every day. It's been falling for now about a week. Deaths have been falling. The growth rates are falling. So it looks like Italy has reached peak and is now coming down. We know that South Korea and China have already done that. And we've actually seen the growth rates of infections in the U.S. slow. It's still growing, but the growth rate is slowing. So these are positive signs that we're getting these rolling peaks, depending upon when the country got it and the typical pathway that these viruses take, which is kind of 2 months. In the third month, we start to peak out. That means that we should expect to see in the month of April, at some point, the U.S. infection rate peak and the growth rate start to fall. And I think psychologically, that doesn't mean that we can get demand going in the month of April. We can't get the economy going that fast. But psychologically, the market sees that. It will start to look out ahead, and the optimism, the psychological profile will change, and that could be what brings the market up well before the first positive economic numbers we see from the government. That's usually how it happens. And so we're optimistic that April could be a very important month for shifting the psychology from gloom and doom, depression, how are we ever going to get through this, to, well, we are going to get through this. It's not great, but at least we know that we see light at the end of the tunnel, and it's not an oncoming train.
Right. Okay, so let's talk about that a little bit. So there's this April 30th kind of number or date floating out there of when we're going to really try to jumpstart the economy back up and everything else. Trump was talking about a few 100,000 people were going to die and this, that, and the other thing over the whole thing, which, I don't know, take that with a grain of salt, I think. They're building models based on assumption, and they're assuming a lot. So I would just, I'm not saying that they're wrong, but I'm just saying there's a lot of assumption built into what's going on there. Yeah, there's like zero fact. They're just guessing 100% on what's going to happen.
It's like the USDA, lots of assumptions.
That's exactly right. They're totally assuming.
Yeah.
All right, so let's fast forward here. So we got April, we get through May, then we jump into June. Assuming everything's going like they expect, we see in the rest of the world on our house, that June time frame has got to be, when that report comes out in June, that's got to be there could be some pretty big swings in the market by June, don't you think?
Well, we think April will be looked back throughout history as the month of infamy. Not to use the quote from the 1930s, but I will. Mm-hmm. And I think it'll be viewed as the month of infamy because it'll be when markets bottomed, when the economy bottomed, and when probably one of the most panicky, fearful times, at least in anyone's memory, started to ease. And right. That means that when we look at June, we're going to be in a full-blown restart of the economy. We're going to be seeing significant increase in exports, weather problems developing that we see coming. We're going to have a quarterly grain stocks report at the end of June that's likely going to show, oh my gosh, where's all the corn that we supposedly have?
Right.
And by the way, we don't wish ill will on anybody, but we have to be, our job is to forecast markets, and the virus in South America is going to get worse. They're moving into their fall and winter seasons. They're going to be moving into the ideal temperatures that cause community spread. You already have it down there. You're already kind of shutting down things there, and they actually don't even have a problem yet. We see South America getting into all kinds of trouble over the summer months, and having increased closures, increased lockdowns, and we think there's going to be a significant fear factor of them not being able to deliver on their normal export flows coming out of Brazil especially. And that means there's going to be an enormous opportunity as everyone floods to the only country that actually has some inventories lying around that are willing to sell, which is the United States. So we're very optimistic that scenario of exports improving, economy improving, we can't find all this corn, and South American supply export disruption issues really offers June, as you just said correctly, as the potential for an explosive month for the yang of the yin, meaning the bullish yang of the bearish yin. And we think there's going to be some really, really good opportunities, not just opportunities for a higher price, but opportunities to actually sell a price that covers your cost, makes you a paycheck, and allows you to pay the bank for a little bit of money. We really believe that's going to happen, and we're optimistic. So long as you don't have to sell today, that you're going to get a great window here over the summertime. And to be patient, keep the faith. We don't say this because that's what you want. You actually believe that's going to happen.
Right. Yeah. No, I'm right there with you, man. I think there's going to be some, assuming that everything doesn't go off the rails and there's some other crazy thing that happens.
Assuming that April is the last month of complete lockdown. That is the stipulation.
Right. Yeah. And to be honest with you, too, with the price of oil the way it is, I mean, there's a bit of, assuming everything comes back and we come online and everything's humming again, if the price of oil thing doesn't get figured out, that could also be that black swan still that's out there that needs to be cleaned up to really get that price up there, just because of now, that being said, if the economy takes off and runs and there's still cheap energy out there, that's going to be a huge plus. But if the economy just is kind of inching along and the energy price never really changes much, then we're going to have a drag on the economy. So I guess talk about that. What's your feeling on that one?
Well, when the global economy fires up as much as they can, which is going to be a whole lot better than it is today. Right. The demand for oil is going to go through the roof from where it is today, which is very low. Okay, the Saudi Arabia cannot pump enough oil to keep oil at $20 a barrel. They do not have enough oil to do that. They can maybe pump enough oil to keep it at 35 or 40, but they don't have enough oil to keep it down to 20. There's going to be too much demand for it. The stimulus of having that much cheap energy and a rising economy firing back on, it's just, in our view, it's not possible that they can keep the oil market down at 20. Nor should they want to. I mean, last time I checked, Saudi Arabia doesn't really have any other way of generating money for themselves other than selling oil.
Yeah, they're not known for their farming, that's for sure.
Or their technological advancement. So, so it's a short-term geopolitical ploy, but I don't think anyone should view it as a long-term situation. And if we can get crude oil back to $40 or north of 40, that's not the best, but it will certainly help the oil patch. It will certainly help ethanol prices. And it will take the extreme pressure off of the ethanol industry and at least allay some of the fears about losing every bit of demand for corn for ethanol.
Right.
And so, once again, it's a psychological shift that will take place. At the same time, remember, we actually do want cheap oil and energy to help stimulate the economy when we come out of this. So exactly. I don't think we want $70 barrel oil right away. At the same time, we don't want 20. I think somewhere in the middle is probably a good balance, like you said. We want the oil patch to come back online, but we don't want to kill the consumer that just got hit across the head with a 2x4.
Yeah. So it'll be, and about the time the economy's humming, the government will be around to give everybody their stimulus checks. So it's just going to be even better. So I mean, it's just going to be plugging along.
FedEx is right here. I think mine's coming right now.
it'll take that long. I mean, here they did rush this thing through, and it'll be June before anybody gets any money out of this thing. So it'll be
the other thing
crazy.
that we're following, Casey, and I think it's an important point, and I do think it's very telling. We follow the continuous commodity index, which is 17 futures market. We also follow the all commodity cash index, which is just the cash market of commodities. And what we've noticed that since the January peak, when we first found out that China had a problem and then we all had a problem, the futures-based commodity index is down 24% from peak to trough. The cash market index is down 8% from peak to trough. So it's saying that the cash market is down, but down nowhere near as much as the futures market is down. That's a function of the deleveraging, the highly leveraging that goes on in futures markets. When a hedge fund borrows money and then goes 10-1 on the futures contract, which means he's 50-1 or 70, and he gets a margin call, he has to sell. He has to liquidate. He has to sell everything. And so I think this significant outperformance to the downside of the futures versus the cash is telling you that the real market, a real buyer and a real seller making a real transaction for a real economic reason are nowhere near as bearish as the futures market that's caught up in a liquidity crisis, a margin call crisis. And whenever we've seen this, and this is typical, the airline crash, the 1997 currency crisis in Asia, when we had the 2000 September 11 attacks, we do see this huge disparity between futures and cash. And when it gets as wide as this today, it's typically very indicative of the futures markets pushing on the string or getting pretty close to overdoing it to the downside and having a reversion to the mean where the futures come back up into the real marketplace. We're very optimistic. That's not a short-term, day-to-day thing, but it's telling you that we're getting to a point where that breaking away of the real market can't go on forever, and it's gotten so wide that we think that the month of April we'll start to see those two markets coming back together, and that's a positive thing that we always like to look at. We call them cash differentials, and they're really, really important during panics. So.
Right on. Okay. Well, good stuff as usual, Shawn. Lots of good information there. Plenty of fat to chew on there. So if folks want to reach out to you and get some information on what you guys are doing over there at Hackett Financial, what's the best way to do it?
Our website's the best place at Hackett, Hackett, advisors.com. All kinds of downloads and podcasts to watch to see if what we do might be of interest to your listeners.
Right on. And I am Casey Seymour with Moving Iron Podcast. Make sure you check me out on Facebook, Twitter, and Instagram at Moving Iron LLC. Also check out my website, movingironllc.com. And check out the Global Ag Network and all the great podcasters out there like the Dryland Farmer Podcast. You hear Brent Carlson on here from time to time, and I'm on his show, the Dryland Farmer Podcast, from time to time as well, along with Landon Nolan. So I guess plenty of stuff to think about here. Let's see how this report goes this week or today, I guess. And then I guess until next time, I'm Casey Seymour with Shawn Hackett. Let's go lose some iron, folks. Out.
Moving higher in the 21st century. Hard-working people working hard for you and me. Moving higher, time and time again. Through the years, you'll find us here. Moving higher.